Well, after a year of frenzied buying and price gains in the double digits, the red hot housing market is starting to show some signs of cooling down. We found out today that sales of new homes tumbled to a 14-month low in June. Sales in the prior month came in weaker than initially estimated. It's just the latest sign that expensive lumber and shortages of other building materials are hurting the housing market. Here to talk about it with us and also break down some real estate investment opportunities for us is Allan Swaringen, President and CEO of JLL Income Property Trust. Allan, good to have you here. So I'm just going to ask you straight up. Do you think the housing boom is over?
Alexis, I think the housing boom still has great resiliency. By some studies, the U.S. is 6 to 8 million housing units underserved on both the multifamily and the single family sector. So I think what happened in this report that you just talked about is a little bit of summer fatigue. And actually, listened to your interview with a gentleman from Coldwell Banker the other day. I think it's a little bit of buyer's fatigue. It has been such a challenging market for investors that want to own a single family home to buy into it, with pricing going off and, many offers above ask and sales in 3 to 5 days. I think it's just cooling off a little bit, and there's a little bit of summer fatigue and a little bit of buyer's fatigue there.
Allan, is there opportunity if you wanted to look outside of residential to commercial? I was just in Chicago, New York and Chicago, my two favorite cities. Love the architecture there. The empty stores upset me in both cities. And my question, and I think a lot of investors are, is there opportunity here, and when does all of that come back? And whatever happened to Jewel Osco? I didn't see one while I was there.
Well, Adam, there's a lot there to unpack. And I'm speaking to you from Chicago, in my home city. Actually, one of the property sectors that you just alluded to, which is retail, certainly has faced a lot of challenges in the mall and in the high street stores. Again, we're seeing return to work come slowly but surely in Chicago. But a lot of the high street stores have yet to reopen. But one of the retail sectors that has done very, very well, and I know you've reported on some of the grocery stores' earnings, is the neighborhood and community suburban grocery anchored shopping center. And you talked about Jewel Osco. It got acquired and merged, and a new company came in, Mariano's, which is now owned by Roundy's. But the suburban grocery anchored shopping center performed very well throughout the pandemic. Sales were through the roof from grocery stores, and that format, that open air format where people can walk around safely and shop, even in the challenging winter environment of here in Chicago, it still has great resiliency. And it's been something that our fund has been investing in for a while now, and we have high conviction about it. It's the one format of retail that doesn't seem to be losing a lot of sales to online. People still like to go to the grocery store and pick out their fruits and vegetables and meat. And then the service stores that live off that grocery store, the places to get your hair cut, get your nails done, see your chiropractor, get your teeth whitened, see the Doc in the Box, or go to Walgreens or CVS. Those stores are doing very well too. So the service orientation has created that format of retail to be quite resilient from sales going to online, which is the big threat for other brick and mortar retail.
Now, to illustrate that, Allan, I'm in Pennsylvania right now. Within 20 miles of where I am, two very large, well-known supermarkets are about to open up. So we're definitely seeing new business in that area. But I want to shift to office properties, because we know that businesses are desperately trying to get back online and bring workers back into the office, and they're being met with a lot of resistance. Are there still opportunities to be had in the office space?
Alexis, I think you hit on the property type that is probably going to be most challenged in the current environment, and I would say for the next 12 to 24 months. So while there may be opportunities there, it's not a strategy that we're continuing to invest capital in. It's the lowest allocation within our portfolio today, and I think it's going to be the property type that we probably watch and wait and see. The return to work experiment is taking longer than people thought. And, public transportation, people need to get comfortable with that again. The Delta variant has certainly knocked that return to work off track a little bit. And so I'm not calling for the death of office buildings, but a property type that we like and we've been adding to our portfolio is in the industrial sector, the warehouse sector, which e-commerce and onshoring and reshoring of jobs in manufacturing has really driven warehouse demand, and the fundamentals of that property type and its performance within our portfolio has been quite extraordinary.
All right, we're going to leave it there. Allan Swaringen of JLL Income Property Trust. Good to see you. Thanks for being with us.